There you go. There's the evidence.
Mhm.
And do we have Jerry Abrahams?
Present.
Tim Hodges?
Here.
I know Kathy McKinnon is not present today, so George Perez? Franklin Perry? Sarah Sanders?
Here.
And Gwendolyn Thames, who's joining right now, I believe. I think we can just give her a second, but I do see that she's here. So we do have quorum.
Thank you. Good morning, everyone.
Thanks, Glenn.
So our first report is from Hazim on the RFP for bond underwriters.
Good morning, everybody. So for your review and also for comments to staff, we brought this item as a discussion to talk about the upcoming RFP for bond underwriters. I know that since the late 2019, when we receive any new members joining CHFA board, there was a lot of questions about how we select bond underwriters, what they do, and what is the process of doing so. So just to give an overview, when it comes to RFP, we do issue a RFP, and that engagement is for 3 years. So for the bond underwriters, the current engagement will end calendar year of this year. So when we issue a new RFP, the engagement will be for calendar year of 2022, 23, and 2024. So for bond underwriters in general, what they do for us is they would help us solicit interest from bond investors for us to access the capital market and raise lendable proceeds, either for our single family program or our multifamily program. Typically, when we go out and solicit bond underwriters, those proposals, we will ask for firms who are interested in being appointed as a senior manager, co-manager, and then the last group is a selling group member. So for senior manager, like the name says, they act as a senior. So essentially, they will be running the book. They will be working with CHFA, with Bond Counsel, with our financial advisor in structuring and devising what would be the optimum structure for CHFA. So then the co-manager will help the senior manager in terms of soliciting and expanding the footprint. So for senior manager and for co-managers, they do have liability in an event that we are unable to find investors. So that's the concept of underwriting. So if in an event that we are unable to find investor, the senior manager will step in, and then between the senior manager and the co-manager, they will step up with the equity to take down the bonds. And then for the remaining group, the selling group, they do not have a liability, but in an event they do have an investor, they can submit it to the senior manager for a potential allotment. So one of the things that I thought that I would like to get input or at least provide for the members' edification, I did include in the write-up an Exhibit A. So Exhibit A is just, and it's not sorted in any order, it's just trying to highlight questions that we typically would ask from each firm. So you have questions about commitment the firm has to CHFA and to the state about their role and what type of services, and whether or not they are involved in any CRA activities or any affordable housing activities. We ask about their experience in the housing industry. As we know, there are a lot of firms out there. So what we're looking for are firms that are dedicated towards housing and do have the bench strength to support us. The next question is about capital adequacy, liability, and ability to underwrite bonds. So this to us is very important in terms of selecting a senior manager role, because it's not just giving an appointment and then finding an investor. It's about dealing with situations where, if in an event that the market may not react to what we want the market to react to, there's a potential for the manager or the firm to step in and ensure that we continue to get good execution. We also have questions about innovation and ideas. In this situation, it ties back to the firm's housing industry experience or understanding about what the needs of CHFA. So we would seek and firms to submit ideas about what are things that we should consider or what are things that we have not considered. And then last but not least, we do have questions about legal requirements and litigation, regulatory investigation. So for us, we also want them to make us aware if the firm is under investigation, under lawsuits, commitments towards affirmative action, and whether or not there's any conflict of interest. So those are the very, very high levels of questions that we will be asking firms. There's other questions, but I'm just trying to at least highlight the big picture questions. Also in your packet is Exhibit B, which is just trying to identify for those who are not familiar, because whenever that we present to the board seeking authorization to sell bonds, we do present and provide this information. But this is just a simple snapshot to show our current team. We break down the team based on two programs. One is the Housing Mortgage Finance Program, which is on the left column, and then the state-supported special obligation bonds, which is on the right column. The difference between the two is the left column is our master trust or our workhorse. This is where we issue bonds for our single-family, multifamily program. This carries the AAA rating. And because this is the workhorse, that's the reason why there's a lot more firms dedicated to that indenture. The one on the right, the state supported, like the name says, this is where we issue bonds on behalf of the state, or the credit is based on the state, where we issue loans for group homes or for supportive housing. So you can see there's groups of senior managers, co-managers, selling group members. I also identify firms that are designated as minority-owned, veteran, civil veteran-owned, and women-owned firms. So I will be happy to answer any questions, comments, because what we plan to do is, and this is very consistent to what we have done in years past, we would issue the RFP sometime in July, and then the hope is to wrap it up and provide a recommendation for the board at the September meeting earliest.
This is George. I have a question. Can you hear me?
Yes, Commissioner, yes.
I came into the meeting a little late because I have a new PC and it's the first time I'm using it for a Zoom meeting and I'm in the office, not home. And I did hear you say that you're going to ask about CRA. But I think it's more important than simply asking about CRA. Can we use if an entity, if it's applicable to them and they fail CRA, to exclude them? Because there ought to be some teeth or some punishment or something that happens for you to fail CRA.
Yes, we can do that.
Because the last time when I tried to make that point, you say, well, we can because we didn't tell them that before. So now it's gonna be clear in our documents that CRA can be something that keeps you from being in the list, even if you put in the list.
Right. We can make it clear that during the engagement period, if in any event you as a firm, when you apply and when we appointed you, you pass, but during the engagement you fail, then we can exclude you.
We could. We shouldn't make it mandatory, just in case there's some.
Yeah, we could.
Right. Okay.
Yes.
Because otherwise, really, what's the punishment?
Right.
Hazim,
Yes.
so this is that's two sort of a question and a comment. So I like how we have I understand why we've elevated one of the minority firms to the senior manager on the state supported lien, and I understand, you know, having both worked in one of these large firms and also having spent years doing these RFPs myself, you know, kind of understand the way this is set up, and it's, you know, it's a very industry standard and all of that. And you guys have been doing this a long time and it's worked, so I'm not sure it makes a lot of sense to recreate the wheel here. But to some extent, being on the other side of this for many years, you know, there's doing good RFPs, and that's a skill in itself. But at the end of the day, it doesn't have a lot to do with selling bonds, right? It has to do with how good the associates are and how conscientious the bankers are and all of that. And what we ultimately really care about is, you know, performance, right? And I think I saw Bob on before, and it always seemed to me that what we would really, and again, don't want to recreate the, you know, derail this process. It's a really important process. You do it very well. And it's important to get the idea generation, and it's important to document what people do for CHFA and for us, and it's important to address the issues that the commissioner just raised as well. But at the same time, we do, when we go through the evaluation process, I hope that we have like a third party provide some rigor onto actual true bond performance, and who are the, I mean, we talk a lot about caring about retail distribution, but we care about retail distribution only because supposedly it's supposed to get better pricing for our bonds because it takes leverage away from the institutions. But does that really show up in better performance? And I know there's a lot of noise and it's not an easy thing to do, but I guess my question for you is, how separate from the RFP process and, you know, all the work that the like mostly associates are going to do on this, how are we making sure that the best performers in essentially the co-manager group, importantly, as well as the senior managing group, are doing the things that we're really paying them for, which is getting us best execution?
So let me first say that when we send this out, one of the things that how should I frame this? In terms of the evaluators, the evaluators will include our financial advisors. So Bob Lam is part of the evaluation team. So when we get this information, we would include certain questions, and with the hope that it would capture what you said, Jerry, to the best that we can. And of course, there are certain things, you know, no matter how much you try to phrase it in words, you know, it comes to that intangible and subjectivity. And that's part of the reason why, you know, I would rely on Bob to give me this insight, because me as the issuer, my role is to ensure that at least, you know, based on what I see, that the members or the firms, whether they are acting as the senior or the co-s, they are in fact performing and is up to CHFA standards, which is pretty high. But then for Bob, what he does, in addition to the execution or the deals that he's acting as our financial advisor, I know that he's also involved in many other transactions involving the same firms. So collectively, what we're trying to do is we want to make sure that, you know, the firms that, you know, if they get selected, we do believe that they do act in our interest, or at least they can perform based to our standards.
Yeah, the problem with I understand that, and I guess the issue with the questions like, you know, your performance is when the firm, you ask the firms to do that, then they spend all their time, you know, massaging it to make themselves look good, which is fine. That's they're acting rationally, and that's okay. But it, you know, I always think that if there's a way we could do it almost on our own, using our own data. I mean, you know, right? I mean, you probably have a
Yeah,
really good
no,
sense.
we do,
Yeah.
we do.
We
And-
use our own data.
Yeah,
Yeah.
we do. So they will give it to us what they say. We also have data from IPRIO and from other third parties to analyze, you know, their quote unquote performance.
All right, last question, and then I'll leave for others. Is and again, I don't want to bias anyone as to, you know, because I know we're just talking about getting the RFP out and we'll respond, but again, it would be, you know, I strongly urge, you know, whoever the committee is that will eventually evaluate these. I know you have the right questions in the RFP, but you need to see if we could elevate some of the minority selling group members up to the co-manager category, and see if we could even elevate one of the minority firms in the co-manager category up to the senior manager category, if in the end of the day everyone's confident that you know, they can do the work. So I'll leave it at that.
Yeah.
I have a couple of questions. I was just comparing it, you know, because we do RFPs as well. We just did one a year ago for underwriters. I was just comparing. And one of the firms that seems to be missing on your list, I'm just curious why, their major firm, is Goldman Sachs. Are they not in the housing space, or?
They did not respond. Yeah.
Okay.
And I know that, you know, at least to my knowledge, they have, I wouldn't say exited, but I don't think that they have any coverage, or at least in connection to CHFA's account. They may be involved in different states, but to my knowledge, they don't have that coverage in housing compared to in the other sectors. Bob, do you have any feedback about that?
Yeah, well, Goldman basically dropped out a while ago because housing really wasn't big enough part of their business, their core business, for them to want to continue. I mean, I would also just like to respond for a second to something Jerry said. But we have all of the orders and allotments, Jerry. We keep that as a record for every deal that we've done. So we can go and look at every deal and see who's put in what orders for what kinds of bonds and things like that. We check all that. We also check designations because one of the ways that institutions can show managers that they appreciate the effort that the managers have made to educate them about the deal is through designations. And so we check those things. Those are the kind of hidden things that we have access to and ask about as well. So.
Great, excellent, thank you.
And I was wondering, I don't see, like, normally our RFPs anyway have like selection criteria, and that's where maybe the CRA thing could be in there. When you do issue the RFP, does it have?
Yeah, we do have that. I mean, that's just like, you know, one of the things that, like, in the beginning, when we basically said, okay, firms, you know, when you do submit your proposal, we're going to evaluate you based on certain points. So yeah, we do have that. But I was just more focusing on the questions per se.
Sure. And then in terms of minority firms, when we did our RFP last year, a lot of new veteran firms have come in. They're service disabled, and we spent a lot of time researching this, but apparently under the state of Connecticut's definition of minority-owned business are disabled businesses. So under state law definition, they're considered minority. And so we've now changed our designation policy, not because of that, but because the treasurer wants to support these firms as well. So now we have every institutional order, at least 2 minority or veteran or woman-owned firms must be designated at least 5% each. So that's another way to help develop minority-owned firms through your designation policy. So just wanted to mention that. And then, are you going to advertise this, or do you just send it? Do you put it on the, how do you get it out there? Do you put it on the DAS website?
Yeah, yeah, that's how we do our RFP. What will happen is we'll finalize it, run it by our legal department, make sure that everything is there, includes all the typical affidavits that's required. We would then post it on our website. We'll also post it on DAS, and then we'll forward it to all the relevant parties to let them know. So that one will be last. We just basically say, hey, this thing is out there.
There's new firms. How do they know about it? If you don't send it to them?
Yeah. So the hope is they did register with the DAS, because we are relying on the DAS that if they did sign up to get notification under, I know that there's a code for bonds or for bond underwriters. So the hope is once we post there, it will get disseminated to the relevant parties who are interested.
Okay, we normally post on Bond Buyer too, but I know it's not cheap. So,
Don't, Sarah, the rumor mill within the muni market is extensive. So people will hear, trust me.
a lot of times there's new firms, like these new veteran-owned firms or whatever, may not be
Yeah.
registered at DAS. But anyway. Let's see
But
what
also, I
else.
mean, we could ask DAS to make an extra effort to notify people in their list that have the destination of veteran zone.
Mhm.
There's nothing wrong with that.
Yeah.
Also, Hasim, I have another question.
Sure.
How do we deal with entities that may be under regulatory issues, right? They have not been sued yet. They're negotiating a consent order.
Mhm.
And not every regulatory action should, in my opinion, prevent an entity from doing business, right?
Correct.
And looking at the firms you have here, I don't recognize every single one, but I recognize most of them, and they're big, and I don't expect that they're ever going to do anything that's going to keep them off the treasurer's list or our list, right? But there's
Mhm.
some smaller ones here that I never heard of, which doesn't mean that they're not good, right?
Mhm.
What happens, like for instance, if there's a big issue about supervising their agents, that's something we should care about, right?
Yes.
But if there's an issue like, they screwed up a disclosure and they fixed it, I know this has been recorded, and I don't want to be somebody to use it against me someday to say that I said that's not that important.
I think it is
That's
being
not,
recorded.
in my opinion, that's not something that should keep you from bidding. So
The-
I know they got to tell if they're being sued, but what about if they're under any current regulatory process that is going to
We,
end up
we,
in a,
we tend to ask for investigations too.
okay. And if they tell you that those are confidential, they can't share it, they're lying to you, by the way.
Right. Right.
Well,
Because
remember,
I've had that issue when I was a banker, and people would say that, and then when I became a commissioner, I go, oh, those little stinkers, they were lying to us. And in some states may have specific laws that may say that they're confidential, but they could get permission. The state could give permission to another government entity to have access to it.
I think the simple answer is going to be based on a case-by-case basis and the severity.
And I agree with that.
yeah.
And I'm saying to you, based on my knowledge
Mhm.
of probably 80%, I mean, there's a couple there, like, I mean, I never heard of like Ramirez, right? But that doesn't mean they're bad, right? I've never heard of them, which is good, right? For me not to know about it, that means they have no issues. Where I know there's some other ones there that in the past we've had some issues with.
Right.
And when I say we, it's not necessarily Connecticut. It could be New York. It could be
Right.
And
understood. So like you said, Commissioner, it's like you said in the past. So the question is, are we seeing a trend, or is there something that when we read along between the lines that they are unable to cure or to remedy the situation, and it's important to us, then yeah, we would react to it. But until we know what it is, and again, based on the severity or when it happened or how it happened.
Right.
You know,
Look, and I'm a
yeah.
firm believer, you pay your due to society, you move on, right? So I'm more concerned about entities that today may be under some sort of process. And I just want to better understand how we go about that. And Bob
Right.
answered the question. I mean, you guys
Yes.
questioned that.
Yes.
Yeah, the other thing, George, just to remind you, is that I was the vice chairman of the MSRB, which is the rulemaking body for the municipal business industry. So when I see these disclosures, I read them, and sometimes they give me, 1,200 pages of reading material, but I'll read them and we'll see what's there.
And if I could ever be helpful, even by contacting another state regulator, I'd be more than happy to play that role. I mean, I think that's one of the things that having the banking commission and this board is a benefit to CHFA, right? Regardless if it's me or if it's Mickey Mouse in this seat,
Agree. And that's why, I personally, I love and I like the interaction with the board, because we do want to get, the board's input to make sure that if we need assistance, then, we hope, or I hope that you would contribute and help us.
Yeah, no, in my case, that would not be a problem. But anyway, you answered my question. Thank you.
Okay.
I have two comments on the questions. The one where you ask about how might the absolute level of capital and procedures you use to allocate it affect your performance. What we've been asking for is the actual amount of excess net capital, because sometimes you just get a lot of words back. And we were actually surprised, to find out some of them have some very low levels of excess net capital. And we've actually kind of drawn a line under $1 million can't really be in a senior role of any kind. So, because they don't have the capital to really underwrite it. So that's just maybe to get a little more hard data, because otherwise you just get a lot of words.
We'll ask for the focus reports.
Yeah, that's what we did ask last time. Now I think Sarah, what you said may make sense too, in terms of putting, instead of leading them down the path and giving the impression that, is open season, we may put some fence around, the amount of capital we would require for, at least the top position, because that is something that we care about.
Then the other thing under innovative ideas, you might want to put something in on ESG. Everybody's talking about ESG, social bonds, and all of that. So, to what extent they have ideas along those lines.
We can put that, but I have a feeling that the firms would volunteer.
Yep.
Yeah, they'll lead with it in the letter.
Yeah.
Well, I think to Sarah's point, it would be also, because we talked about this last time, whether we're supposed to be thinking about, I'd like to see, at least again from my sort of outsider perspective, I'd like to see like the whole bond community coalesce around sort of an ESG standard, and whether that's self-certifying ESG under some sort of objective criteria, or finding a vendor who's going to do it in a reasonable way that's not going to end up, exploiting some kind of monopolistic power. But it could be interesting to see what the firm's ideas and thinking around that were. Yep. Again, it doesn't, at this point, it still doesn't seem to really matter that much in terms of, again, how we're executing, but it may one day.
Yeah, no, I agree.
Where it matters today, Jerry, is in the taxable market.
Yeah, I've heard that. Yeah,
there we
pension
actually
funds and
see pricing differentials. So
yeah, that could bleed to our market though one day.
Yeah, we get enough volume.
Do you interview the firms?
Do a tax exemption.
Oh, sorry. Do you interview the firms?
Yeah. We have not the last few engagements, but we have the opportunity.
Okay, I know years ago I participated in CHFA underwriter interviews representing treasurer, but sometimes you get some interesting perspectives. Okay, any other questions?
No questions. It's Tim. Just a comment, Hazim and team. Thanks. This has been very helpful. It's an area that I'm not particularly familiar with, so I always learn something new, and this was useful. Thank you.
Not a problem.
Any other discussion? We'll move on to financial reports. Allison Murphy.
Good morning, all. Before you are the May financial reports. On the revenue side, mortgage loan and investment interest revenue are coming in 6.9 million below budget for the first 5 months of the year and 6.5 million lower than prior year. As in the previous months, the year-over-year variances continue to be driven by our reduction in our program assets. Prepayments are still pretty high. We are about $142 million higher in prepayments for the same 5 months last year. And as many of you know, short-term investment rates are significantly down from last year. In fact, the state's short-term investment fund, that rate essentially went down to 0 during the month of May. And it stayed there to just about last week, where it's now inched up to, I think, 0.01%. So the authority has been actively trying to reallocate some of our investments in STIF to higher yielding investments. Also, our fees and other income are 7.5 million over budget for the through the end of May. A substantial portion of this variance is due to the sale of a multifamily project that was part of the state-acquired portfolio. The terms of the original agreement provided for the residual value of the development be split between the project owner, and it was DOH at the time, now CHFA, upon the sale of the project. So CHFA's portion of that residual value turned out to be about $4 million. On the expense side, bond interest expense is below budget by 9.2 million and 8.9 million lower than prior year. As mentioned in previous months, we are issuing more refunding bonds than long bonds at this point. Administrative expenses are coming in 3.1 million under budget and 499,000 higher than prior year. When you exclude salaries and benefits for 10.3 million, the current year-to-date expenses are 393,000 higher than prior year's expenses. And lastly, the change in net position is above target by 12.6 million. Are there any questions?
No questions. We'll go to the next report, delinquency and forbearance report. Hazim.
Okay, good morning again. So for the month of May, we purchased 66 loans totaling 13.1 million, of which 11.9 we securitized it into mortgage-backed securities, and the remaining 1.2 million stayed as loans. Including the May settlement, and like Allison said, we continue to see a runoff of asset. So there was a decrease of about 5.3 million from the prior month. In terms of the delinquency level, month over month, it stood at 2.95%. For the down payment for the month of May, we funded 47 loans. Therefore, the funding ratio for DAP for the reference month is 71.2%. Regarding the single family forbearance, we continue to see a decline by 70 to 415 loans. Which involves 301,000 of monthly P&I on 50 million of unpaid principal balance. So this, in essence, comprised of 6% of the whole loans. I just want to note when it comes to the delinquency and the forbearance, we are launching the pilot for the homeowner assistance fund. This is the program that we are administering on behalf of DOH. The homeowner assistance funds, or we call it HAF, is federal dollars that we receive from the American Rescue Plan Act. So the hope is once this is being relayed or being communicated to impacted borrowers, we believe that there's going to be a number of these homeowners, either currently delinquent or in forbearance, will receive assistance, at least through the pilot. And then thereafter, we'll be launching the bigger program. For the multifamily delinquency, we did not close any new loans for May, but we did see one decrease of loans due to a prepayment. So the delinquency rate for multifamily is currently at 2.37%. For the multifamily forbearance, this is the arrangement that the board approved back in April of last year. We provided assistance to 7 projects for the benefit of 8 loans through the end of May. We have 2 loans currently in forbearance, which is the Stamford Housing Authority for Oak Park and Long Hill. We have 5 loans already in repayment and 1 already paid off. So it's going, you know, it's doing what it's supposed to do, but we're not really seeing any more requests for multifamily forbearance. I'll be happy to answer any questions the committee may have on delinquency and forbearance.
Any questions? Okay, next item is approval of the minutes of May 27th, 2021. Could I have a motion?
I'll move.
Moved. Second.
I guess we do a roll call vote.
Okay, Jerry Abrahams,
Aye.
Tim Hodges.
Aye.
I know Kathy's not here, so George Perez,
Yes.
Franklin Perry, Sarah Sanders,
Aye.
and Glenn Thames.
Aye.
Okay. Motion passes.
Any other business? If not, then we'll have a motion to adjourn. All in favor?
Aye.
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 Very good. Got a little time to the next one.
Okay. Thank you, everybody. Go get more coffee or tea.
In a
Thank
bit.
you.
Thank you.